Concerns over rising US deficit and the per share Treasury auctions spooked the market. Auto, FMCG and IT stocks are the big drags.
Indices Bank stock gains on hope that the worst may be behind the lender, but analysts remain wary of more skeletons spilling out of the cupboard even as bank suspects internal fraud and continues its hunt for a new CEO.
Indigo Airlines owner Interglobe Aviation sees its profits soar as higher traffic aided by the Mahakumbh rush. Festivals and weddings drive up income and realizations with forex gains too kicking in. The company also declares a 10 rupee dividend for the first time since 2019.
Softening urban demand and intensifying competition led to Colgate-Palmolive missing revenue expectations even as profits come in line. The oral care major hopes for a revival in the second half of the year.
SEBI will give its final word on the weekly expiry soon, says Chair Tuhin Kanta Pandey. This is even as CNBC-TV18 learns that NSE has applied to shift its expiry date to Tuesday from Thursday. Pandey adds that SEBI may look into any violations by Indices Bank that merit attention.
You're watching us here on Halftime Report on CNBC-TV18. I'm Manglam Malu. With me, Ekta Batra. Not looking like a good screen for the frontline indices. The Nifty is down by almost 1%. The mid-cap index is falling a little less. We have the Nifty Bank down 0.75% as well. 40% more stocks declining than the number of stocks which are advancing. So portfolios are not looking particularly happy. Day before yesterday, we saw a sharp gash in the last hour. Yesterday, there was some recovery. Today, on account of global fears, perhaps there is some weakness.
Hi, Manglam. Yes, I think it's absolutely in line with what the global markets are doing. We saw the markets, the Asian markets correct in line with what we saw in terms of global cues. And, Asia did fall after the US decline, which was on account of deficit concerns. Just to put it into perspective, the US 30-year yield has broken above 5% for the second time this week and has reached levels that we've not seen since October of 2023. So that's really what the street is looking at in terms of a cue going forward. Separately, in terms of earnings back home, I think stocks will be in focus on account of earnings. So we have ITC as well as Grasim coming out with numbers, and separately Sun Pharma, Honasa, a couple of stocks to watch out for, Emcure from the pharmaceutical space. So these will be a lot of, stocks in focus, and that's probably where the action will head in the second half as well. But let's start with the big stock in focus today and has been making news since the past couple of weeks and especially post its Q4 numbers last evening. Indices Bank is in the green after what was a weak fourth quarter and disappointing fourth quarter that was weighed down by accounting issues and MFI stress. Abhishek's been looking at this story. He joins in with what the brokerages are making of the numbers now.
Well, as you mentioned, it's one of the weak counter that we saw with respect to the results coming in, and largely it was factored in. The stock is flat right now, and if you take a look at the earnings, it's been one of the worst earnings in the banking sector from top to bottom across various parameters. Corporate book declining by as much as 15.7% sequentially. It's not seen ever before. It's also, the highest decline that you are seeing amongst all the other larger private banks. The net interest income decline of 43% YOY and 42% sequentially, highest decline in the banking sector. The net interest margin for them is the lowest ever that they have seen historically, coming in at 2.25%. Other income was down sharply by more than 71% YOY and about 70% sequentially. The only bank to report an operational loss in Q4 FY25 and the bank to report highest net loss in Q4 FY25. Slippages were elevated, 5,014 crore. The annualized slippage ratio is the highest in last 16 quarters, coming in at 5.8%. Asset quality gross NPA ratio is perhaps the highest that you are seeing in last 10 years or even more, and they have used their entire contingent provision of 1,325 crores. With reference to the P&L, both the ANA and PAT is below our poll. Coming on to brokerages, they have cut earning estimate anywhere between 35 to 40% on an average, and as high as 45% by Motilal Oswal. Loan growth to be in single digits, and they say that return ratios will remain tepid over the next couple of years for the Indices Bank. Back to you.
Okay, all right. Abhishek, thanks very much for that. So that's on Indices Bank. Some flashes about Colgate on your screen from the conference call talking about demand. So just keep your eye out on that. But RVNL reported an operationally weak performance in Q4 with a decline in revenue and EBITDA. Vinny, our colleague, caught up with MP Singh, who's the director, to discuss the quarter gone by and their growth outlook.
Financial year 24-25 was a challenge for us as we're transiting from our core sector of railway projects to projects secured through bidding. And the predominantly cause of the muted revenue growth in 2024-25 is substandard performance in Q1 and Q2, predominantly due to region of the election in first quarter, which has affected the execution by affecting the movement of the labor. And the Q2 was affected by unusually high monsoon in the country. But from Q3 and Q4, the execution has accelerated. And you can see from Q3, as compared to Q3, Q4 performance is substantial improvement. And in Q4, the revenue growth is of order of 40%. And when compared to the Q4 of the financial year 23-24, the decline is only to the extent of 5% only. But we hope to improve this execution performance in this financial year. And I'm very sure that with our innovative execution methods and resiliency and growth potential of our organization, we'll be able to not only improve our revenue target significantly.
Sir, what will the improvement in revenue targets be for FY26? What could we expect? Right, full year right now is around a 8%, 9% decline. Q4 was a 4% decline. Surely an improvement, what you're seeing on a quarter-on-quarter basis. But FY26, could we expect this to turn positive, mid-single-digit growth at least?
Yeah, certainly we want to improve. The silver lining is in form of our revenue growth from projects secured through bidding, where you can see in the year 25, the revenue growth is around 68%. And if this growth continues, and we are securing more projects in various sectors, so we hope to see a significant improvement in revenue guidance for FY26, and it will be of the order of 22,000 crores.
Okay, 22,000 crores is what you're talking about in terms of revenue guidance. So that was your guidance in FY25 as well, right? 22,000 crores, but that was a miss coming in. So now you're reiterating that guidance for FY26, that you will achieve 22,000, right?
Yeah, we are expecting that because we are some of the projects which we won through bidding, the large projects, they are now under execution, and we hope to get a large revenue share from those projects, be it a BharatNet projects or our projects in various metro sectors and RDSS projects. Last year, it was basically starting year, as in the project execution cycle. Normally first year is revenues are not that significant, but in the mid phase of the project, the revenue growth is substantial.
Okay, so those projects will now start giving you the benefits that will come in, and that's when we'll see the growth also coming in. The first phase is over in FY25. FY26 is where you're going to see that better growth coming in. And sir, overall order book, what is that at right now? And what do you see it going forward also?
Yeah, the order book is a dynamic figure because it keep on moving by adding up the new order flows and reductions in form of the executions done. So the current order book stands around 97,000 crores, out of which around 47,000 crores is from our legacy projects. The rest are from our projects secured through bidding. So this gives us a revenue visibility of around 4 years time. And we hope to see significant revenue in order inflows in FY26 also.
Welcome back. You're still tuned in to Halftime Report on CNBC TV18. Well, definitely a weak day for the markets. We have the Bank Nifty, which is now down over 400 odd points. We have the mid-cap index, which is down over 300 odd points, and an almost 800 point cut that we can see on the Sensex as we speak. Just watch out for a couple of stocks which are managing to buck the trend. So Dishman is up around 12.5% after what was a turnaround on the operational front, and Fortis Healthcare after it held its conference call midday yesterday during market hours. That stock is up around 9.5% today. So definitely some amount of positive outcome there. But let's talk about a couple of companies then. Gulf Oil Lubricants is the next management on the show. It reported what was a steady set. Margins, however, came in flat. We have with us Ravi Chawla, who's the MD and CEO of Gulf Oil Lubricants, joining in to talk about the numbers. Mr. Chawla, welcome to the show. Well, before we start talking about the margin picture, just wanted to understand the entire volume picture. If you can just break up what the core lubricant volumes were this quarter, as well as, say, for example, what you did in the B2B segment when it came to infra and industrial. Was it probably as good as the previous quarters where you did record, the highest ever volumes?
Well, on the volumes, this quarter we've closed at the highest volume ever in a quarter, 39,500 for lubricants, which is about a 7% growth. Even the year has similar, we've closed at 152,000 KL, which is again a 7% growth. So if we have about 10% of business in factory fill, that didn't go very well. If we take out that, we've been at 9%, but 7% is the record. And as you spoke about the industrial IMF, that has continued to grow. And overall, also, we have seen, a good steady quarter. And we managed the margins well because you did have in that quarter, in the quarter four, you did have some exchange rate issues. But we managed that well. And I think this is also the highest margin. And as predicted in the 12 to 14% band, this is 13.6. So I think the quarter has been a steady, good growth quarter and a record year in terms of our profits also have gone up 17%. So I think a good year and a good end to the year in quarter four.
Where does your market share stand at the end of this year? And if you could also break up your revenue in terms of industrial and non-industrial businesses, how much is that contributed? What's your outlook for the next year?
So our B2C business is about 53-54%. The rest is the B2B, which, as you said, of course, the products differ because some automotive products go into industrial. So that we have kept that, and all segments have grown. And I think in terms of overall, I would say that the growth that we have been gaining over the last many years has been to grow 2x the market. So even this year, I think we've been growing in across segments, our key segments. So we have gained close to about 0.4 or 0.5% market share.
And where does it stand at right now?
So in different segments, in diesel engine oils, we are close to double digit, and motorcycle oils. The others, we are around 6 to 7%.
Okay. Now, just coming to the margins, you've seen a fantastic growth in terms of volumes, but your margins have remained flat on a year-on-year basis at 13.5%, and you've closed FY25 with a lower margin of around 12 odd %. Take us through what the key drivers are, how is crude impacting this at current prices, and what are you targeting in FY26?
Yeah, so typically crude will, the base oils that are derived from crude, they follow crude. But we have also seen that base oils, because of the different availabilities, doesn't necessarily follow it all the time. But yes, there is a lag which comes. So I think this year has been challenging in the sense that the exchange rate also plays a role. And we have been able to look at all our segments growing. And we continue to invest in the brand and our, marketing activities. So I think for us, we are looking at this 12 to 14% band, because we believe that is where we are, and also trying to focus on premium products, improving the mix. So we hope we can move to a 14 to 16%, but definitely we would require stable prices of, base oil. But I think that is where we hope that now with the current, cool off in terms of crude, we are able to see that so that we can move to the next band.
All right, we will await the next band. If you could give us some color on what proportion of your revenue currently comes in from premium, and what are you targeting out here since you are looking at increasing your premium contribution?
So we have typically synthetics and semi-synthetics. For us is still less than 5%. So a great opportunity for us. And we do have other products which are, I would say products which give us a better margin. So a combination of these, we've been trying to, in the last 1 year, try to improve that. So if we've been growing 7% overall in volume, we try to at least grow at double the rate here. So we're able to then bring in margin. But yes, since we are growing in all the segments, whether it's agri or car or motorcycle and B2B. We want to really focus on both volume growth and also keep the margin band and continue investing in our brand and other initiatives.
Okay. Just want to, narrow in on the biking segment. That is something that you've spoken about in terms of, a key focus for the company going forward. Tell us, how did that particular segment do for you this time?
So it has done very well in quarter 4. Actually, our motorcycle segment, we have the standard range, which is the mid range of the. And we're also looking at going to the premium range, which is the adventure bikers. So we are investing in our brand there through the India Bike Week. So motorcycle has been one of our key strengths. In fact, we've just launched a campaign for Gulf Pride with a new pack and with the highest specification in the industry with a long drain interval of 10,000 kilometers. So this is really where we've been delivering the best products. We've also gone to the right at the top end with the adventure bikers. And we also have a range for, the value segment, which is called Zip. So we've kind of segmented the market and are focusing on this because this is one of our strengths. Even our brand consideration and brand awareness is in the top 2-3 in the industry. And motorcycle is a key driver for us. We have Mahendra Singh Dhoni, who's our brand ambassador, who's also a very big biker, as we know. So we are promoting our brand, our distribution. We have bike stops, which are branded garages. And we continue to grow with the bazaar segment and with OEMs like Bajaj.
Right. What about, Tyrex and EV batteries? I remember Tyrex, you were targeting 500 to 700 crores with that EBITDA break-even coming by soon as well. Where are you on that path? And EVs as well, you had a target of battery business to do about 300 crores of revenue. Where do those numbers stand?
So happy to share that our business, DC charging business, which is Tyrex, has actually tripled in their revenue and crossed 75 crores this year, 78 crores. So that's a start, I would say. And we are projecting 400 to 500 crores in 5 years' time. Tyrex has about 8 to 10% market share in DC chargers. So that's going well. We're going to expand the factory, expand our service. So that's doing well. Obviously, it's a start in terms of our business. And we've got a lot of chargers installed across in terms of DC charging. They are also manufacturing AC chargers, and that will also help us. And overall, in terms of batteries, I'd just like to tell you that we are into two-wheeler batteries since a number of years. This is mainly for the traditional two-wheeler batteries, but we've also started supplying some batteries for the EVs, for the auxiliary start. So these are VRLA batteries, and that again, we are happy to share in both these businesses. We are now positive in terms of our EBITDA.
How much are they contributing to the business as a whole, and how much do you want it to contribute? What is the target?
Currently we are happy we crossed 3,500 crores as a revenue as a company in this year. And batteries, two-wheeler batteries about 75-80 crores. And Tyrex is a similar turnover this year of 75 to 80 crores. But ambition is that in the EV charging, DC charging, we can go to 400 to 500 crores in 4 to 5 years' time.
I have to ask you this. What is the difference in the market share between you and the leader? And we understand that Castrol is on the block, right? Would you be interested if there was something which was on offer?
Well, let me just tell you in terms of market share, we are definitely the second highest market share in the private sector. And we do have a lot of opportunity to grow somewhere in some of the cases where we are less than 5% market share. So I think overall that is there. And yeah, we'll have to watch the developments on what's going on, as you rightly mentioned. So I think a lot of interest is there for many, global players and other players. So we'll have to wait and watch this space, I think.
Why do you think that would have happened? Is it because the industry is, it does not look very feasible for players in this space, for an industry leader to actually go ahead and, offload its asset? What do you think has driven this? Is it just an individual case, or is it a sectoral call that BP would have taken?
Well, I think that is for them, but I can tell you the lubricant market is a very good market in India, and also it is growing here. So it is a very good market here and other countries also. Definitely in the Western world and developed countries is flattened out, but lubricants as a market is growing very well in India. We've also been leading that to explain to people. And we are seeing the impact that a lot of companies are coming and making investment in fresh production facilities. Indian companies who deal with lubricants have expanded their base oil. So I think India and a lot of the other markets, you are seeing growth, obviously due to reasons of economic development, industrial development, penetration of vehicles. And even if EV is coming, we still see lubricants growing 3 to 4% in the next decade. And maybe it will just go a percentage down after that. But India is an attractive market. So I can speak for that yes, there is an interest in this industry. I think companies would take their calls based on their priorities for us, it's a focus, and India being such an important market, I think many players are coming into India. We have seen that over the last 2 years.
You have, 450 odd crores of cash, and update the figure if you can for FY25 ending. What's the plan for utilization then?
Yeah, so we are happy to share that our board has agreed on a final dividend, which is a record 48 rupees, 1400%. And we have got 1,000 crores cash. We crossed that milestone. So I think keeping that in mind, obviously we are returning to shareholders, but we also will look at some investments in the EV mobility space. And maybe that is what we have done with Tyrex and a few others. So we'll continue looking at spaces where we can invest. But currently, obviously, the dividend has been announced. So it's been a record dividend also.
All right. And you are not interested in buying Castrol, if at all it comes to that?
So no comment on that. I think, as I told you, the market is attractive. It's for everybody to look at what there is. Consolidation keeps happening. So we'll have to wait and watch.
Take that point. Thank you so much for joining in and fielding all our questions. Ravi, always a pleasure speaking with you. With that, we'll leave you. Wish you good luck for the remainder of this year. Take a short break. Come back on the other side. Pearl Global Industries. The management joins in to discuss their fourth quarter numbers. Welcome back. The other company on our radar right now is Pearl Global. It's reported a strong set of fourth quarter earnings. More importantly, for the year as well, the revenues jumped between 30 to 40%. The question is, where do they go from here? Pallab Banerjee, who's the managing director and group president of the company, joins in now. Thanks a lot, Pallab, for joining in. Two-part question. One, will you sustain this revenue run rate going forward? What's your expectation? And secondly, with all that's happening in the US and the free trade agreement with the UK, what are the opportunities for the next couple of years?
Thank you, first of all, for having me on this show. Yes, as a company, Pearl Global, we have a growth plan, and we have been growing at a quite a reasonable rate, and we'll continue to do so. And see, most probably all these garment industry, if we talk about, the largest global players, mostly from Taiwan or Korea, there are multi-billion-dollar organizations or sales, top revenue that they generate. So our goal would be to compete with them and be a big global player. So that way we are looking forward to a good future, like in which we will be continuing to grow quite aggressively, I would say.
So 30% sustainable, 25% sustainable, because the base also increases, right?
Our CAGR that we have been planning is about 15%, 12 to 14% is something that we have been talking about. And yes, when the opportunities are there, like, the market is disrupted at this point of time due to various reasons. And this is the time that, if you are a strong company, then that's the time to gain your market share. So this year we got a good share, almost about 30% we grew. It looks like in the next few quarters, it's looking like that this kind of similar kind of, not maybe 30, but a little less, but that kind of, it is still showing. But yeah, on an annual scale, we would say that definitely we are confident that 12 to 14% we should be able to achieve.
Okay. Well, Pallab, the conversations with, peer companies have indicated that US clients are asking them to bear the cost if it comes to tariffs and the burden of the tariffs if it comes to that. Is that the case? Have you had any such conversations that you can highlight?
Yes. You see, like most of these US companies, the US retailers and brands, they have reached out to all their suppliers to partner. And there are various ways partnership can be done. Most of these companies at this point of time is having a 10% duty, like or extra tariff that is being done. So as you know that we have a WTO tariff, for example, for a cotton shirt or a cotton product, it's averaging around 17%. And now there's a additional baseline tariff of 10%. This is something which has been implemented on April 2nd. And that's why most of these retailers have come back to their supply base and say how that can be mitigated. So that's why some burden share discussion has happened. And now, how do you circumvent it? One, you give some kind of discounts and help the retailer to absorb part of the cost that they absorb, something we absorb, and then something maybe passed on to the end consumer. Or the other way, how do we do it? There are two, three other things also can be done. So it's a combination of these three that most of these US retailers have asked for and been negotiating with their vendors.
So if they meet midway, what could the margin impact be? Because you're targeting 12 to 14% revenue CAGR. What is your margin expansion plan going forward?
So margin expansion plan is more than 12 to 14%. We have said that we should be expanding our margin by almost about 17-18%. But then our exposure to US market is about less than 50%, I would say. So, and on top of it, like we are implementing all these three models that I was talking about. So, for example, they are badly stuck in China. How can I help on those products rather than giving a discount? Then the second thing is if I can land the product, because most of these retailers have a higher cost of landing the product compared to us, like we can maneuver faster and at lower cost. So, and the third is that simple, like you don't do these two things and just give us some kind of discount. So that we have been negotiating. So it's a part of a simple negotiation that we do every quarter, every season. So I'm not overly, I would say, worried about it. Maybe like, for one quarter, it might come in the books because normally our costs are frozen with the retailers for about on a quarterly basis. So
sorry, you said EBITDA compounding should be 17 to 18%, right?
For us.
Yes, so that implies margin expansion. If you could, for the benefit of our viewers, currently your 9% EBITDA margin, what is an aspirational target and by when do you get there?
So we have said that we are looking forward to a double digit between 10 to 12%. And we have given a plan, most of our investors, that within the next 3 years we should be doing it. But we are almost there now. We have almost crossed 9. We are touching almost double digit in this quarter. Also, we almost touched 10 because there are some new projects that we have started, which is still in losses. Otherwise, we should have been more than
okay.
double digit.
The UK FTA, the India-UK FTA, how does that affect you all? And how much do you get in terms of revenue from the UK?
The UK currently is about overall approximately 5% of our revenue. And we have been servicing that market majorly from Bangladesh. As you know, the Pearl operates factories in Bangladesh, Indonesia, Vietnam, India, and Guatemala. So UK, most of our shipment has been going from Bangladesh already. And these customers, with the expectation of the FTA, have been talking to us for the last few quarters and have started doing some business in India as well. So we look forward to definitely the India component will be going almost about 3x or maybe 4x over the next 1 to 2 years. And it should benefit us. Rather than servicing from one country, now we should be servicing them from 3 countries. As you know, that when Vietnam also got into that comprehensive trade Trans-Pacific Pact, because of which they also have the same kind of benefit. So it's a very dynamic movement in the world at this point of time, and the opportunities are coming.
And where would your incremental capex be, considering that it is completely dynamic, in terms of opportunity? So any kind of incremental capex that you have on the cards, and where would it be?
So we are, in fact, our major production is happening in Bangladesh, India, and then followed by Vietnam. So in all these 3 locations, we do have capex plans. For Bangladesh and India, definitely we are going ahead with it.
Okay.
Right. And what about capex? How well utilized are you? What's your capacity expansion plan from here on? How do you fund it?
So we have been funding our capex. We had a QIP also done some time back. So we had that fund which have been allocated this year, and then apart from that, the kind of cash that we are generating, that's going back into the capex. So that planning we have shared with our investors, and that's something that we will be implementing. So the next year, I think we are talking about almost about 230 crores. We already have a plan, plus some more opportunities that we are looking at. And
the asset turnover that you're looking at?
Asset turnover, like, if you've seen, ROCE has touched almost 30.1, and ROE also is about 20.1 at this point of time. We would be maintaining or having a similar kind of run.
Okay. Just quickly, you have operations in Bangladesh. Just wanted a sense, there are these new import rules which have come through as well. Any kind of impact on business that you can share?
So what our business is that we are supplying to the global retailers and the brands across all the markets. Like I told you, like markets like USA, UK, Europe, Japan, Australia. We are not so far very focused on Indian market or China market as of yet. So the import restriction that you're talking about is the goods that is imported from Bangladesh into India. So that doesn't affect us at this point of time.
Okay, all right. We're going to let it go on that note. Thanks very much for joining in and speaking with us. So that's Pearl Global. They're targeting a revenue CAGR of 12 to 14% over the medium term, and a bit cautious about the trade tariffs and the negotiations at this point in time. We'll take a short break, but more on the markets, and we'll focus on F&O once we're back. Stay tuned.
Well, it's a weak day of trade so far. No, two ways about it. Down 250 points for the Nifty. The Nifty Bank is down about 0.75%. The mid-cap is now increasing its losses, though not as much as the Nifty, but still down about 0.2%. A good time to get in, the advanced decline lines as well. They started with the red line above the green one. Then there was an intersection. There was some recovery from the lows that was quickly sold into. Now the lines far and wide apart. It's weekly options expiry today. So what are the levels we're looking at? Not too different from where we are right now. The 24,600 call is seeing some writing, 20 rupees premium, telling you upwards of 24,620 will be some supply, but at the lower level, 24,500 put is equally active for a premium of 15 rupees. So those are selling this strangle, which is a 24,500 put and a 24,600 call. They are hoping for a range between 24,500 at the lower level, 24,470 to be precise at the lower level, and 24,630 at the higher level as an expiry range. Important level to watch out for in the Nifty, 50 points from here at the lower level is the 20-day moving average. The Nifty Bank, which has been meandering around the 20-day moving average yesterday as well, recovered, is now firmly below that level. So the next leg to watch on the way up for the Nifty Bank will be this 20-day moving average itself. Colgate is seeing a lot of shorts. Management commentary in the conference call notwithstanding. ITC too ahead of numbers is down about 2%, seeing some short addition. And we had pointed out the possibility of Dixon Tech entering F&O ban yesterday. Well, it hasn't happened, but today it may, given the rise that we've seen in open interest. And in case you miss all of this, what you can do is you can get all of that on your fingertips, because that's the good news. India's business news leader, and now just a click away. This is the CNBC-TV18 app, which gives you instant access to breaking news, in-depth articles, and all financial world updates, all of them at your fingertips. What you can do is download this app from your Apple Store or the Google Play Store, or if not, just scan that QR code, which will give you the link that redirects you to download link for this app. Stay with us.
Welcome back. Well, for the markets, like we've been pointing out, has been weak, but a couple of stocks have been managing to buck the trend, and one of them is Fortis, which is actually doing quite well at this point in time. Remember, I did mention that the numbers did come out day before yesterday, and the conference call was held yesterday during the market hours. Now, in terms of a couple of key takeaways, the company is interestingly looking to add around 1,976 beds over FY 26 to 29. Majority of the expansion is expected to be brownfield. They expect the brownfield beds to achieve a break-even within 6 months. FY 26, they're estimating 14 to 15% growth in the hospital business and 150 to 200 basis points margin expansion in the hospital business. The growth is expected to be driven by 5 to 6% growth in the RPOPs. Now, diagnostic guidance, FY 26 double-digit revenue growth, margins mid-20s is what they're guiding. FY 26 EBITDA margin on a net revenue basis could probably reach 23%, and in a couple of years, 25%. Nomura has written on Fortis. They maintain a buy and a target price of 700 rupees. According to them, the revenue growth guidance of 14 to 15% is ahead of the current estimates of 12%, and the company guidance implies FY 26 hospital segment EBITDA margins at 22 to 25%, better than estimates of around 21.9%. Nuvama retained its buy, target price 770. It's amongst the select few players, according to them, on a margin ascent trajectory over the next few years. This is backed by 60% brownfield expansion and high occupancy. So good going, Mangalam, for this particular counter, doing well in today's trading session. I think the street is quite bullish on the fact that the margins in the diagnostic business did well this time.
That's about the company that reported its numbers. But what about that is likely to report their numbers? Ekta, Sun Pharma, what is the street expecting?
Well, yes. Sun Pharma revenue growth of around 9%, EBITDA growth of 19%, margins 27% is what the street is anticipating, and a profit growth of around 10%. Expectations is that revenue growth will be led by domestic growth by around 9 to 11%. Street is estimating US revenue of around $500 million, which is up around 4 to 5% Q on Q. Drugs like Revlimid generic are likely to be flattish to marginally higher at around $20 million Q on Q. The global specialty business range is wide. It could be $315 to $330 million and is possibly expected to decline Q on Q, X of milestones due to seasonality. R&D, watch out for it. It's expected to be 6.5 to 7% of sales, so that could impact margins. Commentary, guidance on the global specialty business and launch of a couple of key drugs in the US markets.
All right, with that, we'll take a short break. On the other side, all things commodities. Manisha Gupta joins in with Sumit Gupta of CNBC-CX, perhaps discussing the big move that we've seen in crypto. Bitcoin, remember, this morning hit a fresh record high.
Welcome back, and joining us on the show is Sumit Gupta. He's co-founder at CNBC-CX. Sumit, what a day. It's pizza day, and it is also an all-time high day when it comes to Bitcoin there. I mean, I remember the folklore says that there was a time that you could buy 2 pizzas, just about 2 pizzas from a Bitcoin. It's trading at 111,000 right now. For the Indian markets, that is 94 lakh rupees for 1 Bitcoin.
Yeah. And you know, Manisha, how much those 2 pizzas are worth today? It's over $1 billion. Over $1 billion. Let that sink in. Yes. Phenomenal.
So how are you reading into the price move to begin with? Because, you know, the year didn't start so strong. Of course, there have been those underweight currents coming in from the US markets. But this rally clearly comes in on behind of legislative moves. And not just that, the public companies, the kind of holdings that they have increased in Bitcoin.
Oh, yeah, absolutely. I think this one is a bit different. Normally, we have seen the previous rallies coming in because of retail investor participation. This time, we clearly see that there are institutional investors and whales which are driving the market sentiment than retail investors. In fact, yesterday, I was looking at the Google search trends, and I've not seen a lot of activity in terms of Google searches on Bitcoin. What that means is that a lot of people are still on the sidelines. But this rally, this price move is largely because of US institutional investors who are wanting to get into this asset class before anyone else, and now it's at the 5th largest asset class in the world, even bigger than Amazon and Google. So yeah, we have come a long way.
Well, we have. Also, Sumit, when you look at the Bitcoin ETFs, and that clearly was a changing factor as well in 2024 itself, in Jan, that is, in the last 1 year, with $40 billion of the inflows that we've seen happen in the matter of last week itself. How are you reading these trends?
Honestly, Manisha, I think these trends are going to continue because when I speak to people in the US, I think it's just the beginning of the rally. It's just the beginning of institutional investors. It's the beginning of ETFs. I don't see any reason why this should slow down. Not just that, if you look at the data, as of May 25, only 7% of Bitcoins are held on exchanges up for sale. What that means is 93% of the Bitcoins are on private wallets, cold wallets. And when you see a scenario like this where people are not selling, people are hodling, right? That means that the buying pressure is so high and there's a supply squeeze, which is going to drive the price higher and which is going to force these institutional investors to get in even more earlier. So the time that we are sitting in, I think this rally is going to continue and institutional investors are not stopping.
There also is a statement from the US president saying that he wants to see crypto regulations ready to sign by the month of August before Congress goes in for recess. What are you anticipating from this bill?
I think I would take that seriously, those timelines also seriously. I mean, from my discussion with a lot of my friends there, I think this government is very serious about, passing bills. I think we have seen stablecoin legislation coming out already. We are also expecting one more legislation in terms of market structure. I think those are some massive moves. And I think there's a lot more momentum that we will see in the coming few months.
And where does that leave India, Sumit? Because, yes, it was this week itself that we heard the Indian Supreme Court yet again tell the centre to come out with some kind of a bill, some policy when it comes to cryptos.
Yeah, I mean that's a that's a tricky one. We've been calling it out from several years now. I think, see, look, Bitcoin is the fifth largest asset class by market cap, and if people and if governments are still not serious about Bitcoin being a serious asset class, I don't know what will. I think it's high time. India needs to open up and give more openness and legitimacy to Bitcoin investing, because retail want to get in, people want to get in, and Bitcoin is a lot safer. It's a $2.2 trillion dollar asset class. And if not today, then eventually if we do it 2-3 years down the line, then Indians would end up paying lot more in the years to come. So I think the earlier we recognize it, the earlier we regulate it and bring it under the purview of regulated scenario, I think that is going to be beneficial to everyone, to the industry, to customers, and it will build a healthier and a safer ecosystem, because the world is moving.
It sure is. Sumit, even as we wait for that policy paper, how are you looking at the Indian participation? I understand the taxes are really high, but there are people who continue to invest even at these numbers. Also, the derivative market, that seems to be really picking up and developing faster.
Yes, all the markets are picking up fine, and we are seeing a lot of new investors coming in, Manisha, a lot of new participants. Obviously, it's not as much as we had seen 3-4 years back because of the high taxation. But let me also highlight that if someone is buying Bitcoin and holding it for 2, 3, 4, 5 years time period, I think the tax does not impact them. So it doesn't stop anyone to investing and looking at it like a real estate or a very long-term investment. I think because there is no TDS, TDS is only applicable when you sell Bitcoin. Capital gains when you realize the profit. But I think the way current tax structure is for spot buying, I think people can still take an exposure and either do SIP. We have SIP product. So there are a number of ways in which people can start taking some exposure before it gets even more expensive. And I was looking at doing some analysis yesterday. I think all the macros and tells me that we are nowhere the end of the rally. I think is just starting, and I do believe the rest of the year is we're going to see a lot more momentum in Bitcoin prices.
Oh, well, absolutely. There have been various reports from global banks and brokerages as well suggesting that. But, it's not just about Bitcoin again, because we've seen Ethereum gain by 45% in the matter of last 1 month. A lot of meme coins in US seem to be doing quite well. The Trump coin itself, I mean, the US president is going to have dinner with the people who own his meme coin. I mean, there's just so much happening which is serious and then not so serious as well. What is the serious stuff that you will watch out for this year?
Yeah, I mean, a lot of those things continue to happen. I think Bitcoin is largely dominated by retail plus institutionals. I think a lot of these Trump coin and meme coins are largely retail frenzy, which is driving the prices up. Ethereum, of course, is a very serious, asset, which is promising. Ethereum, Solana. So, these are all, I'll consider them into the blue chips category. But I think for a new investor, I would not focus too much attention on the meme coins and some of these riskier low cap altcoins. Of course, people understand it. Some people get it, and some people have higher risk appetite. For them, of course, they can play around with that. But these things continue to happen. It's not new. We have seen those things happening in the previous rally as well. I think what matters is that, do you really understand what you're getting into in terms of these altcoins? And if you do, and if you understand the risk associated, then why not experiment with a small amount? But yeah, I mean, those things continue to happen. People have different projects. New projects are coming up, and those are all, like I've seen in the last 8-9 years. A lot of these are interrelated. The way it works is that Bitcoin goes up, and then that money then flows into altcoins, Ethereum, Solana, and in the rest of the coins. So it's a journey, it's a cycle, and people who understand this essentially tend to take advantage of that and make higher gains. But if you are new, I think I would request you to first limit it to some of the blue chip ones, and then essentially as you get more understanding, expand to other assets.
Right. Sumit, he can't control his smile.
He can't.
It's $110,000 asset that he is. And, this, even as the market is at the low point of trade, we're talking about the equity markets. And a couple of things stood out for me. One, he said all those who are in this space right now, they're hodling it. That's a very crypto term, as it is, holding it. And then he started speaking about blue chips in cryptocurrency as well.
It's a different asset class, Mangalam, and I think it's time, the way it has stayed, and with various countries coming out with various policy papers on that, I'm assuming that India would follow suit soon.
Yeah, and just to complete the loop on the pizza day that you spoke about, for those who are uninitiated, way back on 2010, May 22nd, 2010, a gentleman from Florida, I guess, bought 2 Papa John's pizzas using 10,000 bitcoins. back in the day, 15 years ago, 10,000 bitcoins.
That's exactly what Sumit converted into. Those 10,000 bitcoins now stand at billions of dollars.
So you might be smiling right now. I know one person who's not smiling is the one who actually paid those $10,000 for those two Papa John's pizzas. We'll wrap up on this edition of Halftime Report on that note. Papa John's pizzas makes you feel a little hungry. What you do is, while Manisha and I eat the pizza, you watch Business Lunch.